Hello everybody, what's going on? So few important updates are coming from Sofi Zen. Yesterday was a fascinating session for Sofi Technologies, especially when you look at how the stock behave relative to the broader indices. While both S&P 500 and Nasdaq dip into negative territory, Sofi bucked the broader market trend, closing green at 18.31 after testing an intraday peak of 18.96 on elevated volume. Nearly 70 million shares were traded. The primary catalyst driving yesterday's price action was a fresh initiation of coverage from Piper Sandler. Analyst Patrick, who maintains a strong historical track record, came out with a $22 price target and a buy rating. That brings the consensus Wall Street target over the past 3 months up to roughly $20.23, implying an immediate double digit upside. What makes this $22 target particularly interesting is how conservative it might actually be. When you strip away short term macroeconomic noise around interest rates and Fed policy, SoFi's underlying fundamentals are firing on all cylinders. Over the next few quarters, earning per share growth is projected to range between 45 and 61% year over year, while top line revenue is forecasted to compound between just 23 to 32%. If and when the macroeconomic backdrop shift toward rate cuts, these conservating price target could easily be revised toward $30 or higher. Looking under the hood at yesterday's institutional and trading data, we saw an intriguing mix of activity. Net short position increased by just over 1 million shares, though short interest spiked by roughly 5.6 million shares at its intraday peak. When this sudden influx of short activity suggests active efforts to suppress price momentum following the analyst upgrade. In the option market, bullish sentiment maintained a clear statistical advantage. We tracked 16 million in call option compared to just 3.9 million in puts, with call concentration centered between 19.50 and $20 strike price for upcoming expiration. Dark pool and the secondary market data also revealed heavy volume. We logged massive individual block transaction worth 121 million, 87 million, and 78 million. Given that SoFi experienced a clear price recovery during the specific window these trade cleared, there is a strong reason to infer substantial institutional accumulation was taking place beneath the surface. From a technical perspective, yesterday's chart structure remains intact. SoFi held firm above its 10-day moving average and successfully absorbed selling pressure in the 18.20 to $18.58 support range. The next immediate hurdle on that chart sits around 18.60. A decisive breakout above this key levels open a clear technical path toward 200-day moving average at $20.75. So to wrap things up, despite short-term artificial suppression and algorithmic sell block, SoFi's strong revenue metrics, earning trajectory, and persistent institutional accumulation signal a very bright outlook ahead. And in the end, I would just like to say that because of this recent institutional accumulation, we may see price crossing above $20 level mark. So prepare now. With that said, thank you so much for being here. See you next one.